Welcome to my first video. Thank you for taking the time to view this. So what I'm trying to do here today is introduce you to my brand and my investment advisory business that I'm starting. So before we get into that, I want to share a little bit about me, a little bit about my background, and a little bit about why I'm doing this. So I started my career as an engineer, and really ever since I got into school, I always wanted to be a teacher. I always thought I was going to be teaching engineering topics and physics and things like that. But, life takes us in crazy directions. So, when I moved back to New Hampshire, I picked up a job at Mount Prospect Academy. And what we do is we work with at risk youth, and we try to really teach them the skills that they need to succeed. And when you're working with these types of students, you often get into a back and forth about when am I ever going to need to use this? So quickly, I found that I really liked talking about financial literacy. This is something that all of my students are going to need, and it's something that I feel really passionate about. So I spend a lot of time in my professional life and in my personal life thinking about these topics. So, how I started getting interested in investing is through my father. My father has been investing for 50 years, and he's very knowledgeable about these topics. Ever since I was a kid, basically 10 years old, most of the things that we talked about have revolved around businesses, have revolved about financial literacy, money management, and I have a lot of really fond memories. I think one of the very interesting and cool things is he had similar experiences when he was a young man. So unfortunately, I think a lot of these concepts and topics are gate kept, and this is something that I want to try to remedy through this business. So the why I want to start this business is people really lack the skills and the education necessary to be financially successful. And it's pretty sad, but it is the truth. And I think this can be pretty simple things like building up an emergency buffer, but it can also be more complicated, like high interest rate credit card debt. So that's something that I talk to the kids a lot about. And I try to explain to them that a credit card is a really useful tool. It's sort of like a knife in that way, but you can also use a knife to do some really dangerous things. So you have to be very responsible if you're going to use these tools. And it's great that as we have moved along as a society, the tools have gotten democratized, and we, as I guess, retail investors, have gained access to those tools. But I think we've been done a disservice because we haven't ever received an education on it. So hopefully I can fix that. And I think one of the other problems with our society, and it really seems to be a problem that gets worse as time goes on, is capitalism, unfortunately, only helps the people that are participating in it. And you can participate in various ways. So really you need to buy assets. And this could be something like a house. This could be something like gold and silver. It could be my favorite, stocks, which are a part of a business. You could also buy bonds, which is essentially somebody else's debt that you're receiving some interest payments on. So there's all these different tools, but unfortunately, if you live in our society, in our capitalist system, you're only going to be able to take advantage of it if you are taking on some amount of risk by buying these things. And probably we'll talk about this at some point, but I think people get really maybe fixated on the idea that some of these investing concepts and some of these investments are risky, which I do agree with. But the alternative is that you could take your money, you could hide it in your freezer, and you have 100% certainty that inflation is going to eat away at it. So, yes, there are risks, but we need to be smart and try to mitigate them because the alternative is not very good either. So, how I want to accomplish this. What I really want to do is I want to get younger people to invest some fixed amount monthly. And this is called dollar cost averaging. This is a very powerful technique because if you're going to be participating in the market, you're going to go through ups and downs. It just is what it is. It's part of the game. And to be quite frank about it, if you can't stomach the downs, you really shouldn't be participating in the system. So another way that I think I add value is I'm going to be able to coach people who are participating through that. And I know that's something that my father has helped me with in a sense because he's there to talk to about it. But really, what makes you able to get through the tough periods is having the experience and knowing that over a very long time horizon, US equities, US business does very well. So we really need to take a long-term horizon. We need to take a long-term viewpoint, and younger people have the ability to do that. So probably one of the next videos that I'll do is talking about compounding, and we will see when we work through some of those examples why that long-term perspective makes such a difference. So what I found is that people really desire for an education. They don't really want somebody to just manage their money, but they want to learn how to manage their money for themselves. So what I want to do is put out these videos and also help people get invested. And I think a very reasonable question would be, what is in it for me as the owner of this business? And really what's in it for me is I would get a percentage of what you have invested. So one of the important things in business is understanding the incentives. By starting out with younger people, I have an incentive to grow the money. So what that really means is if you put in $2,000 the first year and invested that, I would get $20 or $10 depending on when you joined. So either way, it would buy me maybe a lunch. But in order for me to turn this into a successful business, I'm going to need to grow your money over time. And this is one of the areas where you can get a conflict of interest with finance. And what I mean by that is if you already are established and have a good amount of capital, if you invest it with an advisor and they are trying to take their 1% fee, so let's say you have $1 million and you want to invest it with an advisor, their 1% fee is going to be $10,000. And what they're going to be incentivized to do is not lose your money. So you sort of have a conflict of interest within that. And that's really one of the reasons that I want to start with younger people. I think that conflict is pretty bad for this business. So if you have any questions or ideas for the next topic that I can cover in these videos, please drop a comment. I'm very excited to start talking about some of these things.